Okay, welcome. Now this is step index and I will be selling now. Now, though this is a demo account, but I want you to follow me quickly with this analysis. Now this analysis is just simple. It's not price action based. Okay, it's not price action based. So you have to actually do calculation about your equity and actually think about the area the market can actually hit. Now, if you're selling, you have to look at the resistance level where you believe market should not reach. That if market reach there, then you cannot hold your trade any longer. Meaning that this is the closest resistance that we have. And if you are going to set stop loss, let's say I'm making an entry now at 918, then I will be thinking of, can I risk 9193? If I could not risk that, that's about $11, $10 to $11 with the lowest lot size, 0.1, and bigger than that, you understand? So just a little bit like that. Now, this strategy I've actually given it before, and I explained how it's very useful trading NPA, and that includes volatility 75. But today I'm actually doing it. I'm showing us how you can use it to make step index. Okay, I didn't take kudos to this strategy though. All right, I also saw this strategy. Okay, and I checked the strategy, I practicalize it. Okay, even though there are some things that the person did not explain, like the one I'm explaining to you now, but you know, I practicalized it and I was able to see that this person was very right actually in giving a strategy. So I didn't take kudos for that, but I found it and I found it so useful. Now, how did you make entry? You let the moving average are 100 and 300. Maybe you have known it, linear weighted moving average. So when both of them crosses, like I used to tell us, wait for the market for it to pull back closer to the moving average or hitting the moving average. Now, closer to the moving average is what we have here now. So I'm satisfied because it's closer to the moving average. So I believe that the market is supposed to drop right now. Now, if the market did not drop up to the point here, meaning that with this particular trade now that I just run now, that means I will be losing, that's $400, $200 times 3, that's $600. Now, but look, compared to the equity, I'm actually trying to show us this in respect to equity. Now, the equity in this account is 22,000. Let's say it's a live account that is $2,000 account. I would have traded 0.23, meaning that I will be risking less, very less of my account to make higher profit. Now, you look at the stop loss now, as I explained to us, the stop loss will be dragged to the level here. Okay, we are going to drag the stop loss to the closest level here. Now, don't forget the time frame is 5 minutes. So the stop loss closer to the, and the first take profit, as we know, that is going to be the first support since we are selling. So we are not going to let the market get to the exact support before we exit the market. So we're going to modify. So now, what is our risk to reward? I want to take the profit at 68, and I want to stop loss at 94. So I'm risking 14 to make 14. Sorry, I'm risking 12 also to make 14. Okay, risking 12 to make 14. So the profit to loss is still ideal at the beginning state. Okay, now also we can actually see that there is tendency for the market to drop beyond that, and that is why I'm going to set the take profit to at a different value entirely. I'm going to set it at another key zone. So I'm going to modify this and I'm going to set stop loss. Okay, this is it. I'm going to set the stop loss as we set it, but the take profit, I'm going to make it far away from where we made the previous one. Okay, I'm going to put it here. And the last one, don't mind what you are seeing. You are seeing minus 50. That's just 2 point something dollars on your lowest loss size. Don't forget this step index. Stop loss at exactly here, but take profit and another key level. Oh, sorry, I didn't drag. So let's keep dragging. Okay, take profit. All right, so we take profit here. Now this take profit 1, take profit 2, and take profit 3. Now, like I said, I just entered this market believing that, okay, the market might actually start selling there. But remember, something is also very important. I told us, let the market touch the moving average. Let the market return back and touch the moving average. If you have not watched the previous video, go and watch it. You will understand where I actually explain it on how to use it. You will see the video showing this pattern. Okay, that's what I use as the thumbnail of the video. But one thing you need to observe is market is coming back to test this key level back, which is key thing. And that's the area where we have the moving average, and that's exactly where the market is currently now. Now, I'm not saying the market might not pass that area, but market is expected to react around that area and actually drop. Maybe from here, drop down, or get to this point, or drop down. But if it gets up to this level and stop us out, then that market is not heavy enough to make trade. Now, I'm explaining this. All right, welcome back. So the video that I was saying before about the volatility, about stepping this, okay, this is the continuation. Now, I changed the time frame to 1 minute because we can see that on 5 minutes, the market was going against it. So I have to switch the time frame and see why the market is going like that. Now, like I said, this is step index. So you can actually stay with 1 minute instead of going for 5 minutes. Well, I decided to go for 5 minutes because at that time, the 5 minute conditions were just right at that moment. We're close at that moment. If we change the time frame now, you see now, like I said, it has touched the moving average, then the market, as we expected it to, is dropping. Okay, it's dropping, and we have higher chances that the market will hit our take profit one because it's on 5 minutes now. Now, but if you look at it on 1 minute also, 1 minute has done its own. It has actually did its buying. So we are expecting it to confirm for sell, and 1 minute also start selling. No, if in 1 minute now confirm for sell, you know what will happen. Eventually, 5 minutes will not really take time again to deliver because 1 minute will move very fast, so it will reflect on 5 minutes, and the market will play out very good. Like we can see, it's going already. So let's go back. Cancel. Let's go back to 1 minute. You can see it's about coming to touch the moving average. So once it touches the moving average, will be the first step. Now the blue moving average on the other side has actually touched this. Now maybe you don't even have the settings. The question is, you're just telling me that the video is there. What if I don't want to go and watch that video? I want to watch this one and I want to set it up. No problem. This is very simple. On the main chart, you're going to have two moving average 100 and moving average 300. Like I used to say, there is an order that you need to follow. You have to follow the order the way it's supposed to be. You don't just enter the 100 moving average and the 300 moving average. There is order. So let's quickly go there and check. F. Now the first moving average is 300, and you can see linear weighted and weighted close. Then after that, you click on done. Okay, you can see the settings if you don't just put it down. Now the next setting is 100. The next, not that you just do it randomly. The 300 comes first. Why? Because when you finish with method being linear close, the apply to will now be previous indicators data. Now, if you have actually put 100 first, then it means that you will do previous indicator data on 300, which is wrong. You are going to do it for the 100. Then after that, then you will now add stochastic. Now, adding stochastic to it, we just need stochastic for the levels. So that is why we need stochastic, and that's what we have on the indicator window 1. So you're going to add stochastic 111. Like I said, we just need it for the levels. So what we focus is the level, which is 80 and 20. The 20 level is the oversold and the 80 level is the overbought. So that you can know that oversold you can actually buy, at overbought you can actually sell. So like we have, then after that, you click on done. Don't forget level 80 and 20. Normally the default levels are 80 and 20. So we just need it for the level, like I said. Then you repeat the same thing for the moving average on the indicator window 1. You add moving average to it. Then 300, like I said, repeat linear width and weighted close. Then the second one, 100 also, and linear weighted and previous indicator data. Once you are done with that, you are through with that aspect. You are not going any further again. Like I said, you can try this on 1 minute, you can try it on 5 minutes, you can try it on 15 minutes, depending on your equity. Okay, like I love trading on 5 minutes. If you watch me, and people that knows me that I trade for 75 knows that I trade majorly on 15 minutes for fixed on the 5. But if I'm coming to trade neither boom or crash, I want to trade step index, I love trading for 5 minutes because I hate the actions of 1 minute. That 1 minute just can quickly turn around the direction. But when you are trading step index, one thing I've realized is that if you're using this particular indicator, 1 minute is very suitable, very, very suitable. Like all you just need to do is just take 50 pips and nothing more. Don't go beyond 50 pips. Once you are satisfied with 50 pips, I'm telling you, it will hit your take profit all the time once the conditions are met. Look at it here. The conditions were met for buy. The moment they cross around this area, it was crossed around this area. They've not crossed here, so you could not enter here. But they crossed eventually, and the market pulled back a little bit. Here you make your entry. then you set your stop loss at this support level, or you come and set your stop loss here. If you set your stop loss there, it's not bad. To set your stop loss at 67, if you make your entry at 76, that's 10, then you take profit as 5. Though the risk to reward in this case was actually, the risk is higher than the reward. But one thing you're very sure about is that it's going to hit the reward. The reason why you are increasing the risk is because, market can try to hunt your stop loss to stop you out. But if you have actually prepared properly for that, you can actually watch the market. If the market is changing direction, so you can close the trade manually. And if it's not changing direction, you're just trying to play, it's going to return back and you're going to make your profit. Like you can see now, eventually the market never pulled back. Then from 76, if you have actually target 100 pips, it hits your 100 pips, but I advise just 50 pips from 76 to 81. Here, the market have smashed your take profit and you are out already with 50 pips. And if you're having 50 pips, once you can actually focus on that. An $100 account, what you find yourself doing is doubling the $100 account, doubling it and doubling it again, doubling it and doubling it again. And you eventually find yourself turning $100 account to $200 in a day. Do it again the following day, do it again the next day, do it again the next day. All you just need to do is just follow the rules. Like I said, follow the rules. Now, another thing that we also advise that you can add to this that will help you is that if you are using another time frame, like you are using for this 1 minute, it's also very good that you check on higher time frame. If you are using a higher time frame, check on the lower time frame. What did I mean? If somebody is thinking that probably this market is still going to rise up, that once it gets here now, it's going to enter the market. Now the person can enter the market and the market keep dropping, and he thinks that it is the right that is actually playing in. Whereas, look at 5 minutes. 5 minutes is confirming that the market might drop more, like we are expecting. 15 minutes is even about crossing, telling you that the market can really, really drop. So if you are expecting the market to go back up on 1 minute, then you will be wrong, because all conditions from 5 minutes, 15 minutes, we're waiting for a sell. Now, if you are waiting for a buy, then something is wrong. So eventually you can see how the market actually keep playing out on 5 minutes, and you can see on 1 minute it seems contrary now. But don't forget, 1 minute has done its own for a buy, which is wise for you not to be entering again when the market is already returning back. It's for you to wait for a sell again, so that you buy, you sell, you buy, you sell, you buy, you sell. You don't just buy and buy again. Okay, this is not price action. This is just indicator-based strategy. So always have that at the back of your mind. So thank you very much. If you have not liked and subscribed, please do subscribe. Subscribe. Okay, I'm pleading. Subscribe to my channel and actually turn on the notification bell. I actually expect the subscriber to have hit 1,000 so that we can actually start a weekly review, as I promised, because I told us weekly review is very important. But it makes sense when your video has actually gained much more likes, meaning that there will be much more recommendation of your channel to people. So if it's been recommended, people will be able to have the idea of the trade that they are going to trade in the new week. So if I just did analysis this week now for this coming week that I want to trade, and nobody actually watch it, okay, so the purpose has been defeated. So that's why I'm actually pausing, not because I am not a man of my word, but because it's very important that it fall into the right hand at the right time. So please do me a favor, recommend the channel to somebody, like the video, and subscribe if you've not subscribed. If you have subscribed, turn on the notification bell, and the moment you receive any alert of my video, check them out. I promise they will be worth it. I promise you. Thank you very much, and I will be expecting to see you in the next video.